For the last 5 years, one company has been the main character of Bitcoin. They've bought billions of dollars worth of BTC. They've become the largest corporate holder in history, stacking over 3% of the entire supply. And their main man has become the de facto spokesman for institutional adoption.
There is no second best.
Famous for his laser eyes and his promise to never, ever sell. Yes, I am of course talking about Strategy, the company formerly known as Microstrategy. But what happens if the main character becomes the villain? Right now, there are whispers that the Strategy trade is unraveling. The company is facing a critical deadline in January that could force billions of dollars in automatic selling. Their stock is trading below the value of the Bitcoin they hold for the first time in years. And with cash reserves dwindling and massive dividend payments due, the unthinkable question is finally being asked. Could Strategy be forced to dump their Bitcoin bags? And if they do, will they drag the entire crypto market down with them? It's a scenario that sounds like pure FUD, but the numbers are starting to look genuinely scary. So today, we're going to examine the maths behind the fear. We're going to break down the impending decision by MSCI that could trigger a massive sell-off. We'll look at the collapse of the infinite money glitch that allowed Strategy to buy so much BTC in the first place. And we will ask the hard question: is Bitcoin strong enough to survive without its biggest buyer? My name is Guy, and this is the Coin Bureau. Now, first up, a quick reminder that I'm not a financial advisor and nothing in this video is financial or investment advice. We're looking at corporate balance sheets and market structure today, purely for educational and entertainment purposes. If that sounds good, prove it by smashing that like button until it capitulates, and let's get into it. Okay, now, to understand the risk, we first have to understand the sheer scale of the situation. Strategy is not just another company holding a bit of crypto. According to the latest filings from November 2025, Strategy holds a staggering 649,870 Bitcoin. That is roughly 3.1% of the total 21 million supply that will ever exist. To put that into perspective, that is more than the holdings of the US government, the Chinese government, and almost every other public company combined. For years, this was seen as the ultimate bullish signal. Strategy was a relentless bid in the market. When prices crashed, they bought. When prices rallied, they bought more. They essentially acted as a backstop for the entire industry. And this was powered by what many called the infinite money glitch. Put simply, Strategy's stock, MSTR, traded at a massive premium to the actual Bitcoin they held. Investors were willing to pay $2 or even $3 for every $1 of Bitcoin on Strategy's balance sheet. Why? Well, because it was one of the few ways to get leveraged exposure to Bitcoin in the stock market. This allowed Strategy to issue new shares at that high price, take the cash, and buy more Bitcoin. This increased the amount of Bitcoin per share, which drove the stock price up, which allowed them to issue more shares. It was a brilliant flywheel. But recently, that flywheel has started to grind to a halt. And now there are two massive threats looming on the horizon that could throw a wrench in the gears. So, the first threat is bureaucratic, boring, and potentially devastating. It comes from a company called MSCI. Now, you might not think, know, or care much about MSCI. They're an index provider. They decide which companies go into massive indices like the MSCI World Index or the MSCI USA Index. And these indices are tracked by trillions of dollars in passive capital. Think pension funds, 401ks, and massive ETFs that buy whatever is in the index. They don't ask questions, they don't look at charts, they just buy. Now, for years, Strategy has been included in these indices because, technically, they're a software company. They sell enterprise analytics software. Sure, that business is small compared to their Bitcoin hoard, but it exists nonetheless. However, MSCI has decided they might need to change the rules. And back in October, MSCI announced a consultation. They're asking the investment community a simple question. Should companies that hold more than 50% of their assets in digital currencies be excluded from the main equity indices? They're calling these digital asset treasury companies. And guess who is number one on that list? Yeah, Strategy. With Bitcoin making up over 77% of Strategy's balance sheet, they are well above that 50% threshold. Now, the consultation period ends on the 31st of December 2025, and the final decision is expected to be announced on the 15th of January 2026. Now, this is a binary event, folks. It's a coin flip with billions of dollars on the line. So, let's look at what happens in both scenarios. If MSCI decides to kick Strategy out of the club, the impact will be mechanical and brutal. According to analysis from JP Morgan, exclusion from the MSCI indices alone would trigger approximately $2.8 billion in forced selling. Passive funds that track these indices would have to sell MSTR stock to rebalance their portfolios. They wouldn't have a choice, they wouldn't care about the price, they would just have to sell. But it gets worse. Because if MSCI sets this precedent, other index providers like the Nasdaq 100 or the Russell indices might follow suit. And if that happens, the total forced selling could reach as high as $8.8 billion. That is roughly 15 to 20% of Strategy's entire market cap. If you dump that much stock on the market in a short period of time, the price of MSTR is going to get crushed. And because MSTR and BTC are so tightly correlated, a crash in Strategy stock could easily spill over into the spot Bitcoin market. It creates a negative feedback loop. MSTR falls, dragging down sentiment. Bitcoin falls, dragging down MSTR's asset value. It's the exact opposite of the flywheel that took us up. Now, conversely, if MSCI decides to let Strategy stay, we could see a massive relief rally. It would validate the corporate Bitcoin treasury model. It would tell the world that you can hold crypto on your balance sheet and still be considered a normal company by Wall Street. But right now, the market is, understandably, nervous. Analysts at TD Cowen have called the potential exclusion, quote, misguided and arbitrary. But they admit the risk is real. And the market hates uncertainty. This fear is one of the reasons why Strategy stock has been underperforming Bitcoin recently. Which brings us to the second and perhaps more immediate threat, the collapse of the premium. We mentioned earlier that Strategy relied on trading at a premium to buy more Bitcoin. They called this, quote, accretive issuance. Basically, if your stock is worth $2 for every $1 of Bitcoin, you can sell stock and buy $2 worth of Bitcoin, which benefits your shareholders. It's free money. But as of late November 2025, that premium has evaporated. For the first time since August 2020, Strategy's MNAV, which stands for multiple of net asset value, has dropped below 1.0. As of mid-November, it was sitting at around 0.87. This means the market is valuing Strategy at less than the Bitcoin it holds. You are essentially buying Bitcoin at a discount, but you're also buying the company's debt and operating risks. But why does this matter? Well, because when the MNAV is below 1, the infinite money glitch stops working. If Strategy issues shares now, they're diluting their shareholders. They cannot profitably raise equity to buy more Bitcoin. The buying machine has basically been turned off. And this comes at a terrible time because Strategy is actually cash poor. According to their Q3 report, they had just $54.3 million in cash on hand. That might sound like a lot to you and me, but for a company of this size, it's peanuts. Especially when you consider their obligations. Strategy has issued billions in preferred stock and convertible debt. They owe roughly $640 million in annual dividends on those preferred shares. The maths isn't pretty. $54 million in the bank, $640 million set to go out the door. Now, usually, Strategy would raise cash by selling more MSTR stock. But with the stock now trading at a discount, that becomes very painful. So, where do they get the money? Well, this is where the fear creeps in and where the whispers start. Will Strategy have to sell their Bitcoin? But before we answer that question, and before we look at whether Michael Saylor would actually break his promise, I want to talk about another way to get exposure to this market without the corporate drama. If you're looking to trade these wild swings or just stack sats safely away from the chaos of Wall Street indices, you need a reliable exchange. And that's where the Coin Bureau deals page comes in. We have curated the absolute best sign-up bonuses, fee discounts, and exclusive offers from the top exchanges in the industry. We're talking about deposit bonuses that can go up to $100,000 for high-volume traders. We have trading fee discounts of up to 50%, which is massive if you are active in this volatility, and we have deposit cashbacks of up to 75%. So, whether you're a seasoned trader looking for better liquidity or a newcomer just setting up your first account, these deals are designed to give you a head start. This market moves fast. So, hit the link in the description below or scan the QR code on the screen right now. It helps support the channel and puts some extra crypto in your pocket. These offers rotate regularly though, so make sure you take advantage of them while they last. Okay, back to the billion-dollar question. Will Strategy be forced to sell? To answer this, we have to look past the fear and look at the actual debt structure. Because while the cash situation looks tight, the debt situation is actually surprisingly robust. Most of Strategy's debt is in the form of convertible notes. The good news? None of these major notes mature until 2027 at the earliest, and some don't mature until 2032. This means nobody can knock on Michael Saylor's door tomorrow and demand their money back. There are no margin calls on this debt. And Saylor himself has said that Bitcoin would need to fall to around $3,000 or $4,000 before they faced any real liquidation pressure on their older loans. And even then, they could likely restructure. However, the dividend payments on the preferred stock are a different story. Those are due annually. But here's the kicker. Those dividends are declared by the board. And who controls the board? Well, Michael Saylor controls roughly 42% of the voting power and has immense influence over the company. If push comes to shove, the company could, theoretically, suspend those dividends. Now, this would tank the stock. It would make investors furious and it would likely get them sued. But it is an option that avoids selling Bitcoin. And recently, in late November, he took to X, formerly Twitter, to deny the rumors explicitly. He stated that the company is actually, quote, accelerating purchases and that there is, quote, no truth to the rumors of sales. So, voluntarily, it seems highly unlikely Saylor will sell. But what about the psychological impact? Because even if they don't sell, the fear that they might is still weighing on the market. For years, the narrative has been Strategy is buying. Every time Bitcoin dipped, we waited for the Saylor tweet announcing another purchase. It was a safety blanket. But if that blanket is taken away because the MNAV is too low to raise capital, does Bitcoin lose its floor? Well, this brings us to the question of market reliance. Has Bitcoin's price been artificially propped up by Strategy's buying? If they stop buying, does the price crash? To answer this, we need to look at the cold, hard data. And thankfully, analysts at TD Cowen and Van Eck have crunched the numbers. And the results might surprise you. According to a report from TD Cowen, Strategy's Bitcoin purchases have historically averaged just 3.3% of total weekly trading volume. Just let that sink in. 3.3%. In the grand scheme of things, that is a drop in the bucket. Sure, there were weeks where they bought aggressively and skewed the numbers, but on average, their buying pressure is not the main driver of price. In fact, the correlation between Strategy's buying activity and Bitcoin's price is surprisingly low, around 0.25 to 0.28. This means that statistically, Strategy buying Bitcoin does not reliably predict the price going up. Bitcoin is a global asset. It trades billions of dollars in volume every single day. While Strategy is a whale, a massive whale, they're not the ocean. And we also have to remember that the market structure has changed. We now have spot Bitcoin ETFs. We have other corporations like Marathon and Semler Scientific holding BTC. We have nation-states like El Salvador and Bhutan. The Strategy trade was crucial in 2020 and 2021. They broke the ice. They showed the world it could be done. But in 2025 and 2026, Bitcoin has outgrown Strategy. However, that doesn't mean there's no risk. The risk is less about the actual selling and more about the precedent. If MSCI excludes Strategy, it sends a message that traditional finance is closing the door on crypto treasury companies. It says you can be a tech company or you can be a crypto fund, but you can't be both. This could discourage other companies from adopting the Bitcoin standard. It could slow down corporate adoption. And in the short term, that $2.8 billion to $8.8 billion in forced selling from index funds is going to hurt. That is real supply hitting the market. It won't kill Bitcoin. Bitcoin has survived Mt. Gox, FTX, and the German government dumping 50,000 coins all in one go. So it can survive an index rebalancing. But it will be volatile. So then what's the verdict? Should we be worried? Well, in the short term, yes. The next 2 months leading up to that 15th of January decision are going to be choppy for MSTR stock. If you hold Strategy stock, you need to be watching the MSCI news like a hawk. The MNAV collapse is a warning sign that the infinite money glitch is offline for now. Do not expect Strategy to bail out the next dip with a $1 billion buy. They likely can't afford it right now. But for Bitcoin itself, the fundamentals haven't changed. The network is secure, adoption is growing. And if anything, this potential uncoupling of Strategy and Bitcoin might in fact be healthy. It removes a single point of failure. It proves that Bitcoin doesn't need a corporate savior. Ultimately, Strategy was the training wheels for institutional adoption. They got us here. But maybe, just maybe, it's time for the market to ride without them. Okay, but what do you think? Is Strategy a systemic risk to crypto, or is this all just FUD designed to shake you out of your positions before the next leg up? I want to hear your thoughts in the comments below, folks. And if you want to understand more about how institutional flows are changing the crypto market structure, then you have to check out this video right over here. Okay, thank you all so much for watching, and I'll see you again soon. This is Guy, signing off.